Mayuresh, will stay with this theme, and no point in talking about the mega ones or the giant ones here. Let's talk about companies which are mid-cap companies, and they can soon be large-cap companies. The names where companies are marching towards the billion-dollar club. Some of the prominent names are Blue Star, Hexaware, Jyoti, Bajaj Corp, Century Plywood. Which one would you like to pick as a company which is sub-billion dollar and soon could be a giant in making?
Morning, Nikunj. So I think out of the list that you have spoken about, my own sense is that as consumption starts picking up meaningfully over the next 3 to 4 years, and as the disposable income ensures that people move up the value chain, yes, I think white good companies like Blue Star should benefit significantly, and there is a long way to go in terms of penetration of air cooling products. So in that sense, Blue Star is something that I've always liked. We hold that stock in our portfolio, and this is one stock over a longer period of time can really perform well on the earnings front. Second, in terms of the discretionary demand coming back specifically in terms of the housing trends, housing finance companies should do well. I think LIC has already crossed that mark, but Canfin Homes, the other stock that you've probably earmarked within that list, is something where the AUM growth can be substantial over the next 2 to 3 years. They've got a very judicious mix in terms of their cost of borrowing, so their cost of borrowings stay extremely competitive so that they can maintain their spreads and NIMs. And again, there are no apparent asset quality pressures. They are providing for everything on their balance sheet. GNPAs are absolutely low. There are no net NPAs on their balance sheet, and though the price to book might look a little bit on the higher side, I think those justifications can very well continue if the same trajectory of loan growth in excess of 25% is maintained. So yes, I think within that list, I think considering the theme of unorganized to organized, considering the theme of discretionary demand going up, I think these stocks can really do well. And again, stocks like Century Ply, my own sense is that as the consumption theme picks up more meaningfully, both on terms of affordable housing and generally I think in terms of urban demand catching up significantly, this is one stock within the organized space that can have the advantage of both the GST and the unorganized pie probably coming towards it. So yes, I think these stocks can really do well over the next 2 to 3 years.
Well, the one stock which really hogged the limelight yesterday was Karnataka Bank after ICICI Bank bought 1.09% stake. You know, it almost sounded like as though ICICI Bank is taking over Karnataka Bank with this 1% stake buy. And you know, this is just a disclosure and a official filing which came about in the exchanges. This happened in the March quarter itself. But nonetheless, $12 million worth of longs were added in Karnataka Bank. Siddharth, I know we've discussed banks in depth, but just a call individually on Karnataka Bank, and do you sense that momentum is here to stay with this one?
See, on face of it, it's looking really strong, and you know, it has previously peaked around levels of 164, 165. That was in 2010, and again, you know, the other peak was formed in December 2012, which was around same levels of 157, 158. I'm not saying that it will form peak here, but I am not chasing this stock. The reason behind stock going up is not something which is convincing me that this rally would continue. Having said that, on data wise, chart wise, it's looking great. So momentum might continue, but I am not chasing this counter.
Well, we've extensively spoken about DMart. Now here's the analysis on Shankara. And the reason why we want to flag up Shankara Buildcon is because the stock is up more than 70%. 70% from its listing price. If you're the management, you would blame it on the merchant bank, assuming they really sold it cheap, isn't it? 70% in less than 15 days. The subscription levels were great, but what is Shankara? I mean, before you buy it, you should know what you're trying to buy. It is essentially a chain of retail stores which is selling own brands and other brands of building material. So it's a high turnover, low margin business. 42% is retail, 33% is enterprise sales, and 25% is through channel sales. Just because DMart has done well, that does not mean the entire retail sector should do well, but that's how Shankara has moved, both in terms of valuations and also in terms of the recent price action. The stock now, based on FY18, not FY19 or FY20, is trading at a P multiple of more than 60 times. What's going on with Shankara? Do you think Shankara has a promise, and the promise is that unorganized sector becomes organized sector. The building material space is highly unorganized. Here's the retailer, he will gain market share.
And realty revival.
Realty revival.
All these are logics given. So stocks don't sustain at such valuations, especially mid-cap stocks which have a business model which have very low margins. So I still remember like this. You have Hindustan Sanitary (HSIL).
Yes.
They have got a subsidiary which runs all these retail arms. Actually, that stock gets dragged because of that, because that makes losses still. So I don't know what's happening in a lot of these companies, but people need to be very careful, because when the correction happens, all these stocks are going to fall, I think, big time.
Mayuresh, quick 30-second analysis of Shankara. Yes, no, or I don't know.
Now again, as Sandeep was mentioning, the valuation is probably on the higher side, so I think it doesn't make justification to buy the stock at such high valuations.
Okay, just 54 seconds left to go before we kickstart the pre-open rates for today. And of course, one needs to see whether there's follow-through coming in PFC and RSC or not. Also, what happens to Adani Power as well as Tata Power as well after that big crash that came about in the stocks post the Supreme Court order, which has blocked higher prices to make up for losses for increase on production in imported coal prices. So fair amount of short pile up in both these names in yesterday's trading session, immediately after the SC verdict. So these stocks cracked hard. REC PFC held out. Karnataka Bank, ICICI Bank, they saw a fair amount of traction, as did a couple of realty as well as other banking and FMCG names as well. ITC also was the top winner in trade yesterday. So we're going to see whether there's any follow through coming on ITC as well or not. Let's start off with what Vedanta is up to, and now post the merger would be interesting to see what sort of reaction you see in the stock, although you know everything is already absorbed in the prices. Indoco Remedies is the other one. They've got a warning letter for their Goa plant, but it's interesting to see that there are only 2 observations, and there's no any data integrity issue. The observations are very minute in nature, but nonetheless, Indoco Remedies has started off gap down by about 20% or so. Couple of other earnings reactions as well coming in. Reliance Defense, Goa Carbon, they should be reacting to their earnings too. And besides that, I just want to see what a Karnataka Bank is up to after those significant longs in the stock yesterday. Today too, it starts off marginally in the green. REC PFC should come up for you on your screens next, and then of course you should have Adani Power and Tata Power as well on your radar after that big crack yesterday, and today too you're seeing some red ticks emerge. For the rupee, some bit of weakness of about 10 paisa or so. 64.59 is where the currency is, but we are still relatively strong.
Well, in terms of the basic pattern, nothing changes. You know, we may talk about Tuesday in isolation, try to connect it with flows, technicals, and then arrive at a conclusion. But frankly, what we saw yesterday is extension of a broader trend, and the broader trend are very simple to understand. First broader trend, emerging markets are outperforming developed markets. Within that, India is in a pole position. Second broader trend, there's a lot of domestic liquidity, because of which whenever there is bad news, markets are ignoring that. Whenever there is a rumor or good news, markets are simply capitalizing on that. And third, dip buys are getting rewarded. If there are intraday dips also, that's getting gobbled up, and that explains why there is enough and more excitement and enough and more energy in some of the small cap stocks. So it's sometimes, Sandeep, one of those phases in the market where we can talk about macro, Fed, earnings, valuations, and sound intelligent, but doesn't matter. I mean, we are in a very broad trend, and the trends, like I outlined, are simple to understand. Be with the trend. I mean, trend is your friend in this kind of a market.
But the macros determine the trend. So I think as long as the macros stay in place, the equity market rally or the bear market stays. So I think the macros are supportive of the bull market, and it will remain supportive for a long time. So buy on dips should be the strategy ideally. But I think the absurd valuations in some of the small mid-cap stocks will not eventually sustain, and people who are buying them without looking at valuations, they need to be very careful that they could lose potentially half their capital in the next correction.
Yeah, Reliance Industries, and they also have come about with another new package. The new tariffs, of course, have come into play. So Reliance continues to be in focus, especially after, TRAI actually saying that they can't continue with their free summer subscription offers. They've now come out with a monsoon surprise. So that's going to be an interesting one as to what really happens to the subscription play for Reliance Jio in the months to come. Just wanted your quick take, Mayuresh, on what Reliance is up to, and does it significantly become more of a Jio story as opposed to an E&P oil and gas story now?
Morning, Aisha. I think the story always has been refining and petchem for Reliance, and as their core capex is on the edge, my own sense is that the entire work in progress that they probably invested over the last 2 to 3 years should start fructifying into more productive assets, and that will ensure that their core ROEs from their two core businesses of petchem and refining really start contributing from FY18 onwards. Secondly, the capex of 2 lakh crores that they've done on the telecom business and the kind of subscribers they have received post the Jio Prime membership announcement that they've done of 73 million odd, and again considering the new offers and the data pricing that the existing incumbents have probably come down with, my own sense is that the subscriber and revenue market share gains would be far more evident for Reliance on the telecom part of their business. They need far more subscribers to probably break even on the EBITDA front. Whether that happens over the next few quarters, I think the numbers will do the story, but largely I think looking at the base that is probably signed in at this point of time and assuming revenues start trickling in, yes, that does create a positive impact. The stock has reacted positively for all these news, but as numbers start coming through from both its core business and the telecom vertical over the next few quarters, my own sense is that the return ratio, specifically the ROE, which was subdued at around 11%, should start expanding meaningfully. So yes, I think I remain positive on the stock, and a clear disclaimer, we hold this stock in our funds.
Okay, that's the call coming in Reliance Industries. Let's also tell what our trader friends need to keep on their radars today. The 18-hour small case greed and fear index, and after that big spike in the market, significant amount of DII buying in the cash markets, that index should have gone a little bit more into the greed zone, and yes, it is. 67 is where the needle is currently at. So pretty far removed from, the tick yesterday, considering that was a little bit more tilted towards the fear end. Not in the fear zone completely, still very much green, but yes, the reading was a little short of that 67 mark yesterday. Today it's back in the green zone. The cues this morning, they continue to be weak, both US as well as Asia. Though off late we seem to be ignoring even the global cues, and we've been charting our own territory, so to speak. Also, Q4 earnings kickoff, IT is going to be in focus ahead of Infi's numbers and all the expectation on a buyback really coming in from Infosys, and a sizable one at that. Infi was a mover in yesterday's trading session as well. Also, the finance minister has vowed now with regards to act swiftly on the NPA cleanup. The Nifty Bank closed at record highs yesterday, and you saw a fair amount of pickup in the entire PSU banking pack as well. So that's something that you need to watch out, whether or not there's a follow-through action coming in there.
Well, Infosys, it's thumbs up from our technical experts. Mayuresh, is there money to be made in Infosys? We don't know about what they're likely to indicate, but a buyback surely is coming. That is what our understanding is.
No, what really has to hit tomorrow, Nikunj. And yes, I think it really depends on the time horizon. I think if you're a long-term investor with a view of more than 2 years, staggered way in buying a bunch of these top-tier IT stocks makes sense. But yes, I think there are multiple headwinds still plaguing the sector as a whole. You're not really sure on how the pricing environment is panning out for the US clients and the European clients as well. So I think the pricing trends are going to be extremely crucial, apart from the constant currency guidance that the company will meet out. Again, I think the expectations broadly between 7 and 9% in CC terms. But what happens in their core deal pipeline, what happens probably in terms of the currency headwinds, because some sheen will be taken off from the EBIT margins on the operating efficiencies, though we might see deal ramp-ups happening, execution improving, They've got a very decent order book. The client wins have been substantial, specifically on the digital front. But the entire argument then becomes on the client side and the discretionary spending thereof. And that headwinds will probably curtail the EBIT and the EBIT margin expansion, at least from a short-term perspective. So what the management guides tomorrow is going to be extremely critical in terms of the demand landscape going ahead. And if pricing trends are expected to be stable along with the CC guidance which the street expects, my own sense is that any dips onto the stocks in frontline IT, including Infosys, can be viewed as a buying opportunity. But wait for results. I think no need to rush into the stock. Let's hear what the management has to probably say in terms of the outlook going ahead.
970. Sandeep, tomorrow's morning, same time, we would be analyzing Infosys. What do you think we are likely to analyze? Good news, bad news?
I would say that there's money to be made in Infosys, but on which side I don't know. So I'm not touching the stock. In any case, I think what returns you will get in Infosys or many of the IT stocks, ultimately you have to look at what potential returns you could get vis-a-vis the scenario where domestic focused companies could actually benefit a lot because of the revival cycle. So I think that's what you have to evaluate. If you are an index hugger, you have to buy Infosys per force. But if you are not, then you are just buying it for some trading gains.
CK, what is your sense on which way could the trading gains be made, by going long or going short on Infi?
Well, I would take heart from the kind of price action that we saw yesterday. I know the stock was getting drubbed and quite severely at that over recent days. And suddenly out of the blue, for no reason at all, it's up about 1.5% yesterday. Seems to be a hint of shorts getting covered over there. Perhaps a little bit of adventurous buying, but definitely shorts getting covered. And that might possibly hint at some foreknowledge about something to come in the quarterly numbers. I'm just taking a guess here and trying to correlate price action to a possible event. I may be completely off the mark in this one, but price action never happens without a reason. So I think if shorts are getting covered, there could be some hint of some bit of surprise in the result.
Just want to take a pause, and since we are discussing Infosys, I'm going to take the clock back and let's put a number here. About 2 years. Let's make it about 2 years ago, 2015 April, and let's look at the IT index from April 2015, and then we'll tell you about Infosys, Wipro, and TCS, and you'll be surprised that even though Infosys has not kept up to their promise, they've come out and they've slashed their guidance 2 or 3 times in last 12 months. The IT index has given you a return of about 12%, massively underperforming the market. During that same time, Infosys, despite that recent rubbing, has been a marked outperformer, and you don't want me to go close to a Wipro or HCL Tech. I mean, those stocks have just got punctured terribly. Wipro, if I knock off all their acquisitions, is actually not growing. Their old business is contracting. HCL Tech, they're doing better than the industry average, but their margins are not there. So there you go. I mean, you look at it. There are the returns. I mean, IT has been such a terrible underperformer, with all the hopes of the fact that, oh, you know, US economy is making a comeback and some of these businesses will make more money. What amazes me, Aisha, is that automation and technology is touching our life on a daily basis. But the disruption which has happened because of adaptation of new technology,
that's also on a daily basis.
So, you know, this is not the traditional way we valued IT. Earlier, if US economy did well, Indian IT sector did well. Now there is no direct correlation.
Yeah, and you know, I guess artificial intelligence in itself is becoming so fragmented, and there's so many aspects to it, so it's difficult to pinpoint what trend is going to take over from here. But anyway, let's revisit what the pre-open rates in the market are indicating, and well, just a very flattish start. The SGX Nifty is still indicating a soft start, so let's see which way we are headed. But let's just recap the trading ideas coming in today, and CK's got a buy on Sun TV with a target of 815, a buy on DLF as well as what he's recommending, target 166. Kunal Bothra recommends buying India Cements, target 176, and a buy on ICICI Bank, target 302. Siddharth Bhamre recommends buying Petronet LNG, target 460, and a buy on ONGC with a target of 198. Let's take in some top trading ideas. CK, what's top on your radar?
Well, I would roll with a Sun TV long, currently 793, 8 rupees stop loss from entry, with a target at about 805, 810 for the day.
Siddharth, what about your top call?
Well, I'll go with a breakout trade where I would suggest to go long in Petronet with a target of 460 and stop loss of 409.
Kunal, your top strategy?
Aisha, I would like to recommend a buy on India Cements with a target of 176, stop loss at 166.
Minute 40 to go. Mayuresh, give me a top investment idea where you are happy to commit capital as we speak.
Again, on declines in a staggered way, Karur Vysya Bank is something that I probably feel that can do better. The worst in terms of asset quality has probably played on the balance sheet. GNPs have moved significantly higher from 1.3 in FY16 to almost 2.66, 2.7 in FY17. Similarly, on the net NPA front, from 0.55 to 1.68. So higher provisioning, incremental slippages going up took the sheen off earnings and the return ratios, along with subdued loan growth of 3.5%. But the expectation is with lower slippages coming through, with lower provisioning, that will lead to lower credit costs, and credit costs should come down from the 130, 140 bips that it is currently posting to around 60, 70 bips over the next 4 to 6 quarters. If that happens, the kind of growth that we've seen in the deposit base because of demonetization, that should sustain the loan growth, and the NII growth should come back to the 10-11% mark, and largely at valuations front at 1.1, 1.2 times price to book looks quite reasonably placed in the demand environment that we are talking about. So any decline onto the stock in a staggered way is something that I'll look at over the next few weeks.
Okay, let's just revisit now what stories we could actually look at tracking today. Karnataka Bank, definitely look out for a follow through on this stock. Power, you look out for Power Finance as well as REC as well. So look out for these two, considering the under ownership in the stock and the kind of long build up that we've seen of late. And yes, Adani Power and Tata Power, whether they continue to sink in trade today too, that's something that we're going to keep on our radars. And then of course, Kane Vedanta merger a done deal. So look out for those stocks as well. The earnings reactions coming in, and they're pretty positive on Ken as we speak. So that's the first take, absolutely flat, 92.36, and that's something which we can deal with. For all tactical purposes, we're still at all-time highs, well above the 9200 mark as well, 92.33 on the index. Flat rail over fiscal prudence. Let's check in then on what we're currently seeing on Vedanta, and what sort of reaction you're seeing on the stock, if at all anything. That will just come up for you on your screens. 1.6% higher for Vedanta as we speak. Indoco Remedies, the US FDA has released a warning letter for the Goa plant with two observations. A, that there's been a failure to follow adequate written procedures and failure of responsibilities and procedures applicable to quality control as well. Indoco starts off down about 4.5% as we speak. Reliance Defense as well as Goa Carbon should be reacting to their earnings. So both those stocks will just come up for you on your screens. 3.25% higher for Reliance Defense, and Goa Carbon gaps up 8.25% as we speak. Some other names which are in focus, JM Financial, wherein yesterday there was a sizable block deal, so look out for that. Wipro, they've concluded the acquisition of InfoServer on April 10th. And the impact on the financials is going to come in from the first quarter for Wipro. J&K Bank, which is now mulling an issue of preferential shares, so look out for that. And Mahindra Holidays too, which has bought a 3.25% stake in Holiday Club for in excess of 2 million euros. Mahindra Holidays, just a very quiet start for this one in trade. But besides that, let's check in on what Infy is up to. The talks are heightened of a buyback announcement in the earnings when they are delivered tomorrow. But Infy starts off quiet after a nice smart move in the stock yesterday. Karnataka Bank and ICICI Bank, after ICICI Bank buying that in excess of just a little over 1% stake in Karnataka Bank. Karnataka Bank shot up yesterday, today too, 160 plus levels. PFC, REC, both those stocks up next. They should come off screens. And PFC, the first rates haven't trickled in. They've started just about marginally lower. Adani and Tata Power are the other ones. You must look out whether or not there's any follow-through drubbing in the stocks, and there sure is, both in Tata Power as well as Adani.
The Bombay Dyeing is trending up, 6% up for Bombay Dyeing, 1 million shares. Archie's It's the volumes which really, amaze me here. In the first 3 or 4 minutes of trade, Archie's only on National Stock Exchange has seen a volume activity of about 6 lakh shares. Small stock, but look at the volume activity. Bombay Dyeing, I don't recall any large institutional investor really tracking Bombay Dyeing, but 84-85 rupees for Bombay Dyeing. Prime Focus is inching up very, very smartly. I'm trying to search for any of those, big ticket movers, at least in the mid-cap space, and there are lots of them. If you want me to go down the barrel, you got Hisar Metal Industries, Padmaji Industries. I don't track, honestly, half the names which are flying up on my screen right now from the mid and from the, penny cap space. So let me see if I can identify something which is of reasonable market cap. And MRF has added, has moved up strongly. Sundaram Fasteners has moved up strongly. Pokharna Limited, will be talking to the management in minutes from now, and that is also looking up very strong. You've got Eicher Motors, 300 rupees of Eicher Motors. Yeah, that's quality which is once again moving up. Eicher has not done anything great of late, but today it's turning out to be one of those big days for Eicher Motors.
Oh yeah, 26,000 plus levels. In fact, it's relatively marginally better for the broader markets. Bombay Dyeing, like Nikunj rightly pointed out, Karnataka Bank, Indibulls Real Estate, PTC, Marksons Pharma, Syndicate Bank, you've got JK Tires, TV18 Broadcast, marginally IFCI. So these are your big buzzers today. Stellar Technologies holding out well. JM Financial JM Financial is down today. Andhra Bank, PTC, Gen Irrigation, JP Power. These are some names which have sprung up nicely positively in trade. What about the F&O universe? IGL, Vedanta, IOC, Bajaj Finance and JSW Steel. These are your big winners today. And on the flip side, it's Bharti, Tata Power, Adani Ports, Adani Enterprises and United Spirits, which are the losers. CK, your first observations on trade, it looks like a quiet start, but do you sense that there's potential we could pick up?
Well, it is indeed a quiet start, and one would have hoped for a better start than what we have got. In fact, the Nifty future is trading very mildly in the negative. This is certainly not what we signed up for at the close of yesterday. So the start is not overly encouraging, but the breadth is fairly decent so far, and you don't have too many losers, and the losers are also particularly things like Adani Power and all that, which is news-led. So there is no selling, so that's the plus side. Now we don't have any index moving items up on the gainers list. Eicher Motor is a big one, no doubt. But then Petronet, India Bull Real Estate, Vedanta, etc., these don't really move the needle for the Nifty so much as the others would. So perhaps a little bit of dullness in the initial phase, maybe for the first 30-45 minutes. By that time, people will settle down and identify the stocks which are going to move. So looks more like a stock-specific day, and we may all have to postpone our high expectation that had got built in at the close of yesterday.
So that any stock name which is there on your screen which is popping up?
Well, on the first site, Petronet LNG, which we have a recommendation, that's doing well, and it's a breakout, so it's confirmed it's in direction. Secondly, we may see it as a not so good start, but what SGX was suggesting and what start we got, I don't think so we should complain about it. And I believe market is heading higher from current levels. We are seeing some of the names like KTK, which may not probably repeat its performance and may see a negative downtick today. We had SAIL, which didn't do well yesterday. Metal stocks didn't do well, especially steel, and I'm seeing some buying happening in steel stock early in the day, especially SAIL and Tata Steel. I'm seeing some buying taking place from lower levels in United Breweries also after a gap down opening. We are seeing some buying there. So yeah, we should wait up and see how market is panning out. May not be a big day, may not be a big downtick also. What is negative? HDFC Limited. That stock which is is under pressure since last 1 week or so. Might drift down to 1450, 1440 odd levels, but I would buy HDFC Limited at those levels rather than thinking of shorting.
Okay, some other names which are looking active then, and well, it continues to be Vedanta, which is actually holding up very smartly, 2% higher. This is indeed your top winner. And also, you know, it's interesting to see how some of these OMCs have held out just so smartly from within the Nifty names. So IOC continues to perk up for a third consecutive day. IOC is now seeing traction. It's up almost 1% as we speak. You've also got cement, which is holding up pretty okay. So ACC and Ambuja are both names which are looking pretty smart. Ultratech Cement as well has started off marginally in the green. And Yes Bank as well is seeing some early signs of buying coming in. But yeah, it's the Adani group of stocks which are really getting battered, and tires as well are taking a bit of a pause. Remember, yesterday turned out to be a big day for the tire space. Today, CAT, MRF, etc., they're the ones which are taking a little bit of a breather. Kunal, your first observations and stocks that could be traded right now?
I think it's a flat sort of an opening, and nothing to complain as such, because I see a lot of momentum which was there in stocks yesterday. I think many of these stocks are carrying the momentum. So I would take that as a positive sign, even though the index is not showing any great signs as such. One of the stocks which I recommended even yesterday, and that's Engineers India. I think the stock is trading towards a good breakout. Yesterday it managed to close almost at the high point of the day. The volumes was extremely good, not just in terms of cash but in terms of futures as well. I believe that this stock could see some more substantial upside going forward as well. So my earlier targets was closer to 168, 170. I maintained those targets on Engineers India, recommending a buy even at current levels. And one of the other names is Reliance Capital. I think it saw a late surge yesterday, from 605, 610 levels to almost 620, 625. I see that the stock is sort of consolidating on medium-term charts, trading very close to this resistance band of 625, which I think should be taken out very soon. So even from a breakout candidate or anticipating a breakout, Reliance Capital could be bought into.
It's a decent start, let me put it this way. Now, Indian liquor stocks clearly have been shaken and stirred after a raft of announcements which have come first from Supreme Court, then from the MP government towards liquor ban in the state. Here's India's largest liquor company, United Spirits, and the Chief of Strategy, Binti Shankar, on her views on prohibition and how volume growth could be different because of the recent announcements.
Prohibition